Trading market structure. Guys, in this video, I'm going to show you the effectiveness of observing market structure and how it can make you more profitable by being aware of it. Let's jump straight into this. The importance of market structure. Now, what is market structure, Ken? I'll get onto that in a moment, but if you can seriously get to grips with this, and I'm going to help you in this video fully understand it, if you can, it will take your trading up a level, just being fully aware of the asset or whatever it is you're trading in terms of its price movements. Now, in terms of the market structure, essentially, this is the direction in which the asset of what you're trading is moving in. So let's say, for example, you're trading GBP dollar and it is within an upward trend. It's important to be aware of its market structure. So when we're trending to the upside, what you'd naturally or typically be seeing the price doing is, as it's on its journey to the north, it's printing higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So on its upward journey, the lows are getting even higher and the highs are getting higher as well. Okay, so higher lows, higher highs on its upward trend. Now, typically, when you see that, you might even spot a channel, okay, a channel in which the price is moving to the upside within as it's sort of printing those higher lows and higher highs. And you might even notice within this ascending channel as well, we're touching the lower trend line, we're touching the upper trend line as we're on our sort of journey to the north. Now, typically when we're in this market structure, okay, now what we want to be aware of is when we're going to see a reversal of that structure, when that structure is voided, okay, and you can look out for the signs of that. And then what happens then when we're seeing a voiding in that structure, and I'm going to show you an example of how we spot those trend changes and when it's classed as voided and we start seeing the price then reversing. So we've had this we've had this ascending channel, now we've got this descending one, and on the descent, when the market structures change and we're trending to the downside, what we're going to be printing is lower highs, lower lows, lower highs, lower lows, and you see the price moving within that descending channel structure. Okay, so that is just give you an understanding there of what market structure is, and it's seriously the level of importance that it plays. And if you really are aware of that and you tie that in with your methodology and your strategy, man, you will kill it. I'm telling you, you will kill it being aware of that. So let's go over to the demo area and give you a real current example now. Let's get it. Guys, we are over at the demonstration area. Stay lit, baby. Yeah. So I want to give you an example of market structure, and we're going to take a look at the Dixie. So that's the dollar index, right? And this example that I'm going to show you, as you can see now on the screen, you can see this market structure is to the downside, right? We can see that the dollar has been trending to the downside. You know, anytime we've seen a pullback or a rally, it's been sold, right? And what is the market structure here? Look, we're printing lower highs, lower lows, a lower high, see, lower than this previous one, lower low, you see, lower than this previous low, lower highs again, lower lows. You get the point. And you see how I said about when we're typically in that market structure, we're forming a pattern which is known as a channel. So we're going to the downside. Whoa, I'm in this channel, I'm going down to the south. Whoa. So we're in this descending channel, almost like a water, not a water ride. Yeah, a water ride, like a water slide. That's what I was meant to say. Man, I love water parks. Water parks are amazing. So we're in this chute going down like the kamikaze. Whoa. So, and in our journey, as I said, to the downside, lower highs, lower lows, lower highs, lower lows. And this is what we're doing. Now, as you can see here, one thing to be aware of, signs of potential reversal in the trend. Like we had our first one here actually, and we formed, can you see? We formed this sort of hammer, almost a bit of a morning star structure to indicate a change in trend. Okay, a change in trend, and then we had some buying momentum, and then we broke out of this descending channel structure. Now, really, how did we void this bearish market structure? One, obviously, a nice sign is bullish closure above and out of this ascending channel, but more so important, you see the previous lower high here. See, we broke above that, so we voided the structure. You see how we're printing lower highs, lower lows, but we breached the previous lower high, so that's it. The structure has now been voided off.
we've killed off the bearish market, essentially. You see how we had a nice little breakout and retest, form this bull flag, and have extended nicely to the upside. You know, this market structure, I was talking about this for weeks in our podcast. We have a podcast that we run. So look, just quick recap to me forecasting this, tying the fundamentals and technicals in with my analysis, and just go and take a look at how I called this for the past few weeks. All right, dude, let's get back to the dollar a minute.
Yeah.
Okay. Obviously, we were speaking, I was pointing this out to the members earlier in the week, right? That if we just look at the chart here, price action was moving within this descending channel structure. We're printing lower highs, lower lows, lower high, lower low, so on and so forth. And now you can see the bulls are trying to break out of this structure.
Yeah.
If that breaks out, man, that's significant, dude.
It is.
It's huge. It will really lay the foundations for a continued recovery because we're effectively just clearing this market structure, avoiding it, you know. And like, there were signs here, actually pointing this out to the members on the 1st September. What day was that?
Tuesday.
Yeah. We formed like this. This is known as like you could look at that as a hammer candlestick. So we start reversing. And then, yeah, man, this could just fly. It's interesting. I was going to bring up the dollar chart. It's quite significant, this dude. So basically, let me bring up the daily chart. You see how price action, I said before, we're moving within this descending channel structure, you know, printing lower highs, lower lows, lower highs, lower lows. And then we broke out of this. And now you see yesterday, we managed to sort of retest that and close above it. I think that was really significant for the dollar bulls in that, you know, we can continue to recover. You know, it wants to go for, you know, you see, this will be the first back-to-back week of 2 greens since, look, back here, since June, June, yeah.
That's big, actually, isn't it?
Yeah, significant. That's a long time. As you can see there, guys, nicely called. So what triggered this dollar upside that we've seen, this change in trend? Well, obviously, as I mentioned, how we bounced at the lower part of that channel, this tied in really nicely. We had a good run of economic data out of the United States, and data was coming out well. You know, you can keep an eye, in terms of economic data, keep an eye on Forex Factory, right, for the high impact data. Also the data in orange, the amber data, semi-important, because where the economy, the global economy has been in a bit of a crisis, everyone's just looking at every point of data that they can to get an idea of, you know, are we starting to see signs of rebound? So that, again, that was me tying in the fundamentals in there, how I make a lot of my trading views. Guys, in terms of, by the way, in terms of daily fundamental and technical analysis, I provide this as service, ongoing service. People always ask me, freaknetwork.io is an ongoing service of providing fundamentals and technical analysis throughout the day for our members, trade ideas, so on and so forth, just making it go hand in hand. Loads of confluences. Let's trade, baby. Anyway, back to this. So we broke out this structure and we did extend to the upside. At the moment, we're just consolidating a little bit at the time of recording this. We had a nice breakout and you see that surge to the upside, and we caught a really nice bit of upside momentum actually with, downside momentum with euro dollar. Took some pips there, nice amount of pips with that move breaking out of the dollar. Again, I ran this down to our community in our webinar. You can see the clips here.
You know, for me, you know, I love my flags. What we've got here. You know, so we broke out of this market structure. We've retested that. We've consolidated. We've formed a flag. I know Jerome Powell's already positioned the markets with this dovish tone. Is there room for this to now extend to the upside? You know, and then last week as well, one of my final points here, let's just explain this, is net dollar short positions trimmed for the 2nd week straight. So this is according to CFTC data. The CFTC data picks up on, you know, market participants, what they are in terms of, you know, how many contracts in the futures market are people short a currency or long a currency, whatever the case may be. And the net dollar positions were trimmed. So people trimmed their shorts for dollar for the 2nd week running.
Guys, as you would have seen from that webinar, I was prepping up our community with a big dollar risk event, the FOMC rate decision. Now, look, just keeping details tight, it's essentially, it came out as expected, right? They had a dovish tone, but Jerome Powell, as you can see, this gentleman here, the chairman of the FOMC, he had already positioned the market with this dovish tone. So the markets, when we were selling off, you know, within that descending channel structure, there was a period at the back end of August where we were particularly hit quite hard. And that was the markets pricing in what Jerome Powell had already positioned the markets for. So that's what I was talking about in the webinar, and how, you know, if he just comes out and echoes that similar tone, we're going to see that surge of momentum to the upside in the dollar. Obviously, the dollar peers are going to get hit. And we provided some really, really nice setups on that with the likes of Euro dollar, Aussie dollar, NZD, GBP dollar, so on and so forth, to our members, to our community, just because I anticipated that. We anticipated that, and there was a nice bout of pips being thrown our way with our setup, just because that's what I mean. It's just tying everything in fundamentally and technically. So I hope that sort of makes things quite clear in terms of market structure. We just go back to the dollar here. As I said, it's so key that we are aware of how the price action's moving, okay, the price structure of things, because this way we can anticipate when eventually we're going to then see a change in trend as well and capitalize on both sides. So we're aware of the upside. Remember the upside channel being printed. So higher lows, higher highs, higher lows, higher highs. And then when we start to see changes in trend, you know, again, this will tie into your own strategy. When we start to see changes in trend, we're printing lower highs, lower lows, lower highs, lower lows. Okay, so just really understanding market structure. It's simple and it's powerful, it's effective. Guys, if you're loving these videos, please, it really means a lot to me, like so much. If you smash up, like literally smash it up and stay lit with me, that subscribe button, give us a thumbs up as well, a like, and then comment below. You know, if you found it valuable, just give me a stay lit, baby. Give me a skra, and even just let me know what you want to see next. Stay lit. Let's get it. Skra!